You know, here's something I've learned. You don't have to be born with a silver spoon, win the lottery, or get some lucky break to build real wealth. That's just the story people like to believe. The truth? It comes down to picking the right things and then having the patience to let them grow. When you really look at wealthy people, most of them didn't just stumble into it. They owned the right stuff, and they held on, sometimes for decades, sometimes for life. These things they own, they pay them in good times, they protect them in bad times, and they quietly keep growing in the background while they're asleep. Most people, they do the exact opposite. They chase whatever's hot, panic when the news turns scary, and sell the moment things get shaky. The wealthy play a completely different game. They choose the right assets, they hold them through the noise, and they let time do the heavy lifting. Over the years, those assets compound, multiply, and suddenly they're unstoppable. And here's the part I love. You don't need millions to start. Fractional shares let you own pieces of the world's strongest companies, real estate. You don't need to buy a whole building. REITs let you own a slice. Index funds let you buy the whole market in one go. And maybe the most powerful asset of all, you, your skills, your personal brand, your ability to create value. At first, it'll feel like nothing's happening. You take these small steps and they feel invisible, but give them time and they turn into a fortress of wealth that protects you for life. So before we get into the first asset, I want you to do something. Drop a quick comment right now. I'm building my forever portfolio. Because once you see this first one, you'll understand why the wealthy almost never let it go. Asset number 1, real estate. Barbara Corcoran's forever play. You probably know Barbara Corcoran from Shark Tank. What most people don't know is she started with a $1,000 loan and turned it into a $70 million real estate empire. But here's the twist. Even Barbara made a move she still regrets. She sold a Manhattan duplex for a quick profit, and then watched it skyrocket in value while the rent kept pouring in for someone else. That's when it clicked for her. Wealthy people don't buy real estate just to flip it. They buy it to own it for life. Why? Well, good properties naturally go up in value over the years, sometimes doubling, tripling, or more over a single career. They give you steady rent checks, no matter if the market's booming or in recession. Your tenants pay down your mortgage for you. You get tax breaks. And when inflation hits, your rents go up too. Sell too soon and you lose decades of income and appreciation. Hold on long enough, and one property could fund your entire retirement. And you don't have to start big. Fractional property platforms and REITs let you get in with a few $100. So next time you hear someone brag about flipping for a quick win, remember Barbara's story. The best time to sell a great property is never. The second asset class is blue chip stocks, what I like to call Warren Buffett's golden goose. Warren Buffett, you know, the guy everyone calls the Oracle of Omaha, didn't build his fortune chasing trends or making flashy bets. He built one of the largest fortunes in history, doing something most people would consider boring. He buys great companies, and then he does something almost nobody has the patience for. He just holds them for decades, sometimes forever. Coca-Cola, Apple, American Express. These aren't just brand names, they're institutions. They've weathered wars, recessions, market crashes, inflation spikes, and yet they keep growing. Why? Because people don't stop drinking Coke during a recession. They don't suddenly ditch their iPhones in tough times. Great businesses adapt, endure, and thrive. Here's where it gets crazy. Just from dividends alone, Buffett makes hundreds of millions every single year without selling a single share. It's like getting paid a massive salary for owning things you were already planning to keep. But even the Oracle himself isn't perfect. Back in the 60s, he sold his Disney shares for $6 million. Not bad. Except if he'd just held on, that stake would be worth billions today. That's why he famously says, the stock market is a device for transferring money from the impatient to the patient. The wealthy adore blue-chip stocks for a reason. The dividends tend to grow year after year, often faster than inflation. These companies are trusted worldwide, which means their brands act like an invisible moat protecting them from competitors. And when you reinvest those dividends, that's when compounding kicks in. Your money makes more money, which makes even more money, snowballing over time. And here's the best part. You don't need Buffett's billions to start. With fractional shares, you can own a slice of these global giants for as little as the cost of a cup of coffee. The secret isn't timing the market or finding the next hot stock. It's time in the market, buying quality, holding on, and letting patience do the heavy lifting. Because in the long game of wealth, the impatient hand over their gold. The patient build empires. Asset number 3, index funds. Mark Cuban's safety net. Mark Cuban learned the hard way that chasing can't-miss stock tips is one of the fastest ways to lose money. Early in his career, he got caught up in the hype, the kind of hype that makes you think you're just one trade away from striking it rich. He listened, he bet big, and he paid for it. These days, he wants nothing to do with that game. Now he swears by something far less flashy, but far more reliable: index funds. Here's why they're so powerful. When you buy an index fund, you're not buying a single stock, you're buying the market. One purchase, and you instantly own tiny slices of thousands of companies, from tech giants to old-school manufacturers, from household brands to up-and-coming innovators. It's like having an entire business empire without having to manage any of it yourself. They're cheap too. No expensive fund managers skimming giant fees off your gains. No hidden costs slowly draining your account while you're not looking. Just a simple low-cost way to track the overall market. And here's the real magic. Over time, markets tend to go up. Yes, individual stocks crash, sometimes overnight, but an index fund spreads your risk so wide that those crashes barely dent the long-term trend. You don't have to be glued to a screen, timing every high and low. You just set it, forget it, and let compounding quietly build your wealth in the background. Want proof? Run the numbers. Put $500 a month into an S&P 500 index fund and keep it there for 40 years, and history suggests you could walk away with well over $1.5 million. That's without day trading, without hot tips, without the stress that turns investing into gambling. Because wealth doesn't just belong to the person who finds the next big stock. It belongs to the person who stayed the course, kept buying, and let time do the heavy lifting. The impatient go looking for jackpots. The patient end up with the whole vault. Now let's talk about the fourth type of asset, future tech. This is where you're really playing the long game, putting your money into the industries that are going to shape the world over the next decades. Elon Musk knows better than anyone what it's like to sell too soon. After co-founding PayPal, he cashed out part of his stake early, a move he openly calls one of his biggest mistakes. Had he held on longer, the value would have been exponentially higher. That lesson stuck. These days, Musk plays the long game. He places his bets in industries that could define the next century: artificial intelligence, space exploration, robotics, clean energy. These aren't just interesting sectors, they're the ones rewriting the rules of how we live, work, and connect. Investments like these can feel slow or even boring at first. You might not see fireworks immediately, but give it time, and the right company in the right space can turn a modest investment today into life-changing wealth tomorrow. Take AI, for example. It's not just another tech trend, it's the engine that will power almost every industry: finance, healthcare, transportation, manufacturing, even space travel. Investing in AI now is a bit like investing in electricity before the light bulb lit every home. The trick isn't trying to guess which hype stock will spike next week. It's patience. It's finding companies or funds with 3 key traits: solutions that matter in the real world, leadership with a proven track record, and the potential to dominate their field for decades. You don't need to bet everything. Even a small stake in a well-chosen future tech ETF can quietly grow in the background while you focus on your life. Years from now, that little investment could be the seed that changes everything, because the future won't just belong to the people who predicted what was coming. It will belong to the ones who saw it early and had the patience to let it arrive. 5. Your brand and skills. The Bezos advantage. Jeff Bezos didn't sell his skills to work for someone else. He didn't settle for a steady paycheck or a safe career path. He built Amazon because he knew his abilities, vision and drive were worth far more than any monthly salary could ever be. He understood something the average person often misses: your skills and your personal brand are assets. Assets that can grow, compound and pay dividends for a lifetime. Every time you practice a skill, take on a challenge, or put yourself out there, that asset grows. Every connection you make, every problem you solve, every project you complete, adds value that can't be taken away. Unlike money in a bank account, these assets can't vanish overnight. They follow you wherever you go, and they often multiply over time in ways you can't immediately see. You don't have to start with a big leap. Begin small. Take a course that hones a critical skill. Launch a project that shows people what you can do. Share your insights publicly so others start to recognize your value, your perspective, and what you stand for. Each small action is a brick in the foundation of a personal empire. Over time, those small steps accumulate into something extraordinary. Your skills become leverage. Your brand becomes a magnet for opportunities. Doors open that you didn't even know existed, and those opportunities pay you for life. Not just in money, but in influence, freedom, and the ability to shape your own future. Because the truth is, wealth isn't just about the stocks you hold or the properties you own. The most powerful form of wealth is the one you carry with you everywhere: your mind, your skills, and your reputation. And when you treat those like the assets they are, the returns can be limitless. Now let's bring it all together. The wealthy don't get rich chasing quick wins or selling too soon. They don't jump at every flashy opportunity or panic when a stock dips for a week. What they do is far more powerful. They build a forever portfolio. It's a portfolio designed to grow steadily, survive storms, and compound quietly over decades. They invest in things that endure, real estate that produces steady growth and income, giving them a foundation that can't be shaken. Blue-chip stocks with trusted brands, reliable dividends, and the kind of stability that has survived wars, recessions, and market crashes. Index funds that capture the broad market's growth, letting them own thousands of companies at once without ever stressing over timing. Future technologies that have the potential to multiply their wealth dramatically over the coming decades. And above all, they invest in themselves, their skills, their knowledge, their reputation, and their personal brand, the one thing no market can ever take away. Here's the best part. You don't need a fortune to start. You just need to start. Small, consistent actions repeated over time add up in ways that feel almost magical once you step back and look. You keep buying, you keep learning, you keep holding on to the right things. You let time do its work, and you let compounding quietly do what it does best. So write this down, say it out loud, mean it. I'm building my forever portfolio. Because the moment you commit to that path, you stop playing the game most people lose. You start playing the same game the wealthy have been quietly winning for decades. A game where patience, consistency, and disciplined choices create a life and a fortune that can't be shaken.